CPI today comes in much hotter than expected, and that's having reverberations through the bond market and the dollar complex. Stocks are doing their own thing, but we'll talk about that in a minute. Core CPI comes in at 0.4%, hotter than the 0.3 estimate. Year over year, core rises 3.3%, estimates for only 3.1. Month over month, headline CPI rises by 0.5% versus estimates for 0.3. And year over year, 3%. So these are just really hot numbers all around. And I know people like to take this out and they take that out. But let's face facts, these are really hot numbers. And, every month you can go through the report and find a number to leave in and take out to make them work in whatever direction you want them to work. But at the end of the day, CPI today at 3% is exactly the same place it was in June of 2023. So we like to talk a lot about progress. And there was progress at one point, but I would think at this point it's probably pretty fair to say that most progress has completely stalled, and we really haven't seen any progress in a very long time when it comes to headline CPI. Even when you look at the core CPI, again we're looking at basically a core CPI was at 3.2% in July. And here we are now, more than 6 months later, sitting at 3.3%. So again, I don't know, hard for me to sit here and say that we've been seeing all this progress in inflation. In fact, to me, it looks like there's been little to none. And when you look at, 2-year inflation swaps, clearly breaking out to the upside here, we cleared a very important level of resistance around this 260 area. We're now trading 275. The next major area is around 283. When we look at, 1-year swaps, those are also moving up to 279. Again, when you look at, basically where we are, you can argue and say it looks like we're clearing or we've cleared a whole bunch of resistance. And who knows, we could be heading back up to this 3% range on a 1-year swap. And, this isn't really what progress looks like when it comes to inflation. And certainly you can look at this as well and start making projections. If you kind of just take this from here and you draw that to there and then come across. If looking at this from a stock perspective and you were looking at this, you'd probably say that we just broke out of a bull flag and we're heading much higher on CPI swaps. And so that's, something really that's noticeable when you look at where the market is today. When we look at 10-year rates, they moved up pretty sharply. We're up by about 10 basis points on the day. And, for now, it looks like we probably got to resistance around 463, 464. But it looks to me like there's a pretty solid uptrend in place here. And right now, it's looking like we had a false breakdown in that trend line. It looks like we're breaking up. Again, if you had watched the video over the weekend, we were talking about the potential for a head and shoulders pattern forming here. And that looks like that's failed as well. And you can see that, if you kind of draw these out, with your neckline in here. So we broke down and now we've come back up. Typically when these head and shoulder patterns fail, they fail and they become continuation patterns of the previous trend. And in this case, the previous trend is higher. And what this might mean is that we overtake this high that was at 480. And when we look at the 10-year minus the 2-year, that's steepening a little bit today. The only reason it's not steepening more is because the 2-year rate is up pretty significantly as well to 436. And what's really interesting, if you look at where the 2-year is currently, it's like we're sitting here at 436.5, and you could only imagine what happens if we got a hotter than expected PPI report tomorrow, because it certainly looks like the 2-year is on the cusp of breaking out and potentially moving back up towards this 4.5% area, and that would obviously tell us a lot about what the market thinks when it thinks about rate cuts. What I thought was really interesting today is when you look at when you look at the Fed funds future for July, it's trading today at 424. Basically, you're not getting a rate cut through the first 7 months of this year. 424 is the lower bound of the current effective of the current monetary policy of 4.25 to 4.5. Of course, the effective funds rate's at 433. But this is telling you that the market's saying no rate cuts through July. And right now, the September futures are trading at 418. And you can see they're moving higher as well. So right now, when you look at where the Fed market's sort of thinking about rate cuts, maybe we'll get one in December. You can see we're trading right now about 26 basis points below the effective funds rate, which tells you that maybe we'll get one rate cut this year currently. And of course, based on what we see tomorrow in the PPI report, that could very well change as well. You are seeing the dollar kind of just hang around today. Around this 107.90 area. What's interesting here is with the yen is that you can clearly see there's a downtrend that we've now broken out above. If the yen manages to get back above this 154.40 area, which has clearly been a resistance region, you can see we could probably move back towards 156.50. The euro is also a little bit stronger today, which is surprising given the CPI report, which really tells you a lot about which way the euro may be going. And it may be that the euro is putting in some sort of bottom here, at least over the short term, and it could be heading higher. I mean, certainly it looks like we have a rounding bottom type of pattern forming on the RSI, suggesting maybe momentum is finally shifting. And the fact that we're not trading lower on a day where really the euro should be lower tells you a lot about where the direction of where the euro may be heading. And finally, we'll look at the S&P. The S&P today is trading down only about 28 basis points, and what's interesting in the NASDAQ is actually up on the day. When we look at the RSP, that's much weaker, trading down by about 66 basis points. This was the high that we saw back here at the beginning of December. It was a big decline, 61.8% retracement level, clearly has been serving as resistance. Right now, it's looking like this continues to be the case, and the patterns right now we're seeing in the equal weight don't really look very strong. The same can really be said of the IWM. And what's also interesting, the interest rate sensitive housing index is also trading down by nearly 2% today, the HGX. And so, you look and you say, okay, well, then why is the S&P trading? I think it's mostly to do with implied volatility resetting and people probably closing out hedges. You can clearly see we have, some kind of consolidation pattern going on right here. And it looks like we gapped lower today. And right now we're kind of just hanging around resistance at 6,050. Notice the support level was around 6,000. Today, 6,000 has been the big gamma level. So if you had taken out hedges yesterday going into this report, you hit 6,000. If you have these puts, you're going to start closing them. And when you start closing puts, what happens to the VIX? The VIX and implied volatility goes down. And of course, when you look at the VIX index today, you can see it jumped right around the time of the report. And of course, what happens is you get, the big jump in the in implied volatility. S&P 500 trades down. Notice, though, that the rest of the day, VIX basically trades all the way back to where it started. It's actually even a little bit lower. And you've had an equity market managed to rally. Notice that when the VIX trades sideways, the S&P 500 kind of tops out. So again, it really tells you a lot about what's happening here today in the equity market. It really has more to do with implied volatility, I think, resetting than it has anything to do with the market shrugging off the hot inflation report, because clearly when you look at rates and when you look at some of the currencies like the dollar yen, certainly not shrugging it off. Those are very big moves that you're seeing in those places, and the same thing with Fed Fund futures. But anyway, that's all I have for you. Please remember to subscribe to this channel, like this video, and share it with your friends. Have a good one. Bye.